Fine.
Ladies and gentlemen, welcome back. Today we're talking about something very exciting, an actual deal that Ryan and I are considering. We're considering buying or acquiring a company that has been in business for decades. We're not going to tell you what the company is, what industry it's in, or anything like that, but we are going to break down some of the numbers and why we're interested and why this is a particularly tricky deal, but why we're still kind of considering it. So, Ryan, tell us a little bit about how we got started talking about this and how we found this business.
Well, this was kind of a unique thing that kind of showed up unprompted through people that we know, which is always a really nice way to both find the deals and also get affirmation that people think that we provide value to people who are looking to buy and sell. And when we got the numbers initially, it was nothing short of impressive. The business works in a very commercialized space, and they do a lot of projects, specifically big projects, multi-year projects even. And as you know from your experience in the construction space, and especially the commercial space, you have accounts receivable that are 30, 60, sometimes 90 days. But in this individual's case, their business would be paid a certain amount at the start and then the rest at the end, and they would have to basically budget it. So when we looked at it, you could see previous years of like minus 500,000 at the end of the year, minus 300,000, and then all of a sudden they were up at the end of the next year, millions plus after everything was paid, plus millions. Like, so they took the losses to then make a massive payday, and
Millions in profit too.
Yeah, that's what I'm saying. At the end of all the thing, at the end of the ledger, it was millions of dollars at the bottom of it, as in like that was after everything was paid. So
in 1 year, they netted over $6 million or $7 million netted. The next year, they're at a loss when we looked at the books, and they were at almost $1 million loss. The balance sheet looks amazing. They've got, millions and millions in retained earnings, but it's an interesting case because those earnings aren't going to necessarily be retained when the company is sold unless you pay for those retained earnings. So you're stepping into this like giant, like feast or famine giant project cycle.
But I'm really excited about that prospect because I think that it shows that there is a system that works. I mean,
they've been doing it for decades.
I was about to say beyond this, the profit themselves. This is a multi-decades long company that's been doing this for Lord knows how long, and the internal structure of the company is going to remain wholly unchanged. Everybody is aware of what's happening, and everybody is willing to stay on for it. So you really couldn't ask for a more ideal situation to kind of take on. The challenges, of course, are in the valuations, and I say challenges as in the traditional standard of underwriting doesn't apply here. We lightly tossed this to the SBA, and our lender said that's not possible.
All they see is that there's a big loss this year on paper right now, and they say, "Ooh, I'm scared of that. I don't get that. I don't understand that." What they're not seeing that's interesting in this case is there's a backlog of maybe $3, $4, $5 million in work to be done that's already like in contract. And there's also one of the big projects that led to this giant boon that they had in the year prior actually has still retained about 10% of the project payout. That it's such a large project that 10% that's still being retained would actually put them at a pretty massive, almost $1 million gain for this year if they were to receive it. So it's all relative.
It's relative, but it's also the perspective of, when you're going to lenders, getting a lending on something like this is saying, okay, you want stability, you want a guarantee. And as it was described to me, we need to know that in the worst possible situation, this business is still going to at least give us our money. And something like that, where it's kind of like, it almost looks like gambling, where it's like you put $1 in, you lost that dollar, you put $1 in, you lost that dollar, you put $1 in, okay, $100 came out. They're going to feel nervous because they're going to be like, well, what if you don't get that $100 out? So it's hard to do a deal like that on standard principle. So we've kind of, we've lightly talked to the owner about this and kind of, run how we look at it. He's gotten some feedback from various individuals in various arenas, and it's been all over the place, from insanely high to insanely low to none at all.
Because he's having the same struggle. He hasn't, I mean, he's been just running this business head down as, an owner for decades and hasn't really thought about selling it until the last year or two. And so now he's being faced with the question, how do I put a value to this business? What do I sell it for? And he's getting answers that are tens of millions of dollars apart.
It's tough. It's tough when you spent your whole life. I mean, you've spoken to him actually face to face quite a few times. You see a guy who's accomplished a lot in his life and is just looking to slow down. He just wants to take it easy, but
He likes traveling.
he likes traveling. He likes doing a lot of stuff, but he's not about to just leave this thing in the hands of somebody who's not going to continue it the way that he thinks it should be. But also he's not gonna, sell it for pennies on the dollar. So he's in quite a unique situation where there's no real direct competitor that he knows that he could just sell to that would likely be a good fit because they understand the market. And there's no real prime lending body that's like, oh, here's a valuation from a lender and blah, blah, blah. We can loan on this. So he's really stuck right now.
And even if there was a competitor that would buy him, they would be going to get lending to buy it too. It's not like a business is going to take out, millions of dollars in cash to just buy another business.
But
Maybe
a business
there's
loan is a little bit easier.
A business loan is easier, yeah, but they're going to want to see what the business loan is for. So they would probably be a little bit more scrutinous if it's for something like this. I mean, in a real way, they would be acquiring massive liability and potential year over year losses. So I think they would even look at that business loan and say, well, your business is doing good, it's making money, but you want us to lend you money so that you can lose money? I mean, it's not a good proposition.
It's hard. You would have to, I think, if the relationship was good enough in that scenario, some sort of internal loan on the business to kind of help alleviate that pressure. So I think they'd have to get very creative with that solution if that was going to be what it is. But I think in any event, he'll have to get creative regardless because nobody, like you said, is coming in with the amount of cash anybody has suggested.
Which comes to what we're kind of lightly tossing around with him, which is, it's an interesting proposition. Typically when you get into a situation like this, you might look into something like seller financing or earn out. And I think those are decent options on the table. But I think for a business like this, that's a great business that does make tons of money. When it does make money, it makes great profit. And some of these contracts they get are, 40, 50% profit margin. I think, and it's a business that's been around for a while. I think it's a business where the owner should get to share in some of the windfall of the sale. And, I don't think that's a bad thing for him to expect. So something that we're kind of looking at in this business is, well, if the SBA or some other conventional lender isn't really willing to lend on this as a business acquisition, maybe there'd be maybe like a lender would still loan to this business based on their credit profile and their retained earnings and things like that to be able to grow and to go and do something. And maybe there would be a way to get a line of credit, like a large line of credit out on this business. And that cash that you get out of the business, almost like getting your cash out of a home that you own by getting a mortgage, you do that on the business and then you pay out part of the exit price to the owner from that money and then also have seller financing. Maybe there's a way to do it like that. That's kind of what we've been tossing around.
Yeah, there's certainly a lot of complexity to how this would have to kind of go down. I mean, in any event, if he was to get the full cash offer up front, he'd have to sell to a very large entity, and I don't know how many of those are looking to buy right now. And like you said, even in the comp space of like people at the same level, they're gonna need some. They're gonna need to borrow a little bit to at least get to what the numbers are being tossed around here. So I think in any event, he's kind of coming down to earth because he kind of got hit from all sides, and I think sitting with that, he started to see like, okay, this isn't going to be a here's my business, here's my cash situation. There's going to be some real depth to this sale and how this transitions.
Yeah, there certainly is. And, I mean, weird situations like this, they just lend themselves to maybe some creative deal making. And that's kind of what we're talking about today is, you know, typically a business around this size, we would probably have some real stiff competition if we were looking to acquire it. It'd be a difficult thing. We'd have to raise a lot of money probably or get a giant loan. This might be a situation where we could acquire this business without having to do those things and just be able to get him paid from the strength of the business. So it's a really interesting proposition. It's a risky one too, though. I mean, we could do all that and then, end up saddled with debt that the business isn't able to pay back in a timely manner.
It's a very it can always go belly up, it can always go under. I do think that the strength of the business lies in how he's built it and the people in there who are all aware of the sale and all on board with the sale, which is probably the best thing you can have. But I think that in the sense of the healthy respect for things not going well, which is any business, I think the way that I've looked at this even since the beginning was that this to me is a unicorn. This type of work, these types of contracts, these jobs, this is a kind of a handshake. Oh, this is so and so, give him the job type of deal. Like your strength of brand is too great to pass up. So it's why for me the risk is equally weighted to the amount of upside. I don't think one is greater than the other. I think it's equal return on that end because I mean you just need to, you got to make it 3 years, get that $6 million at the end of all this, at the end of everything paid back, 6 mil. You took out how many millions if you take out a couple million in the loan, you just paid that right back. So yeah, it's a lot of risk, but I think the upside far and away is equal to the amount of risk you're taking in this one.
I would agree. Yeah. It's I don't know. We'll see how it develops. It's one that I want to see if we can get our hands on in 2026.
I think it would provide. I think I think we're willing to really bend over backwards for this guy and make his life as easy and as nice as we possibly can. Which in most negotiations that you are well aware of, you're really slugging back and forth. But I think for us, it's not obviously not taking a bad deal, but saying like, what do you need? What do you want? Let's figure out how to get that there. And then and then giving the stipulations where it's needed, because obviously this is kind of a unicorn in the space. So we're just trying to make it as easy as possible for him.
Does your SBA guy do like SBA loans for business growth too?
Yeah.
Maybe we talk to him about.
He's very talented.
Yeah, maybe we talk to him about what could the business get as like a business loan, not an acquisition loan. Might be a different story.
Oh yeah, I'm sure it's a completely different story because that factors in a whole lot of that's completely different valuation. So,
because like I think we would both be happy to make sure this guy gets paid as much as the business can afford, but I think it just has to come from the business. And I'm just thinking, the business gets an SBA loan, and that immediately goes to him. Business changes hands. He doesn't ever really shoulder the risk.
No, I mean we're basically putting in our quote our heads at the end of the day, and he's getting his payout for whatever he needs.
I suppose the one place where that falls apart is an SBA loan does work off of a personal guarantee. So I wonder if that personal guarantee can be transferred.
That would be a good question, because again, I feel like
I wonder if it can be assigned.
Because again, with the SBA loan, we'd have to there's a way to do this. I'm sure we just need to talk to our lender about it. I mean, there's a lot of ways that this could go, but I think sitting down with him and kind of proposing this, I think he'd be open to telling us the do's and don'ts and the cans and can-nots of our plan. So, not financial advice. Just going to stipulate that real quick.
I don't know if it's even deal-making advice at this point. We're just spitball. This is more of a spitballing episode.
Yeah, but I mean, it's not often you see some, like I keep calling it a unicorn because I think that the brand having a brand that long in a space this big, doing the size of the jobs that he does, you don't see those come up because normally they'll like a Lennar or somebody, a big contracting firm will buy that. They got that money lying around, but if they're not buying right now, or they don't want to sell to one of those guys, it's kind of one of those where you're like, not a lot of businesses can you see the balance sheet have, seven figures at the bottom of it after everything is paid and going up beyond 1, 2, 3, and 4, hitting 5 and 6s. You're like, okay, you can, if you budget this out, you can do okay.
Mm-hmm.
So this is a fascinating case in somebody who was incredibly successful in an area, and is continuing to be successful, but unfortunately, conventional finance is failing him because they are unable to give anybody the cash to lend on it. So you have to find a creative way to get this thing done to give this guy the life that he wants.
You do.
It'll be a very interesting progression with this one. We're going to have to keep updating on this one.
Yeah, I think hopefully we'll have some updates for you guys in 2026. But in the meantime, I think we're just going to try to keep this relationship, keep moving it forward, and see if we can do something for this guy.
Certainly. I mean, he's walked away from previous offers that he didn't find appealing, so he's in no rush to sell. He would like to, but he's fine doing what he's doing. He's all right where he is. So that's the type of guys you like to work with. They're not rushed and they're trying to get something off their hands. So it'll be fun to see how this one evolves and whether he goes with us or how he kind of manages this deal at the end of it. I kind of want to break down how this one got sold, because I think however it's going to go, it's going to be interesting.
I agree. Well, stay tuned. We do this every Tuesday night right around 6 p.m. Eastern Standard Time. Maybe we'll have some updates for you guys in the next couple of weeks or months on whether we get this deal done or not. But in the meantime, we've got some very interesting episodes coming up. Stay tuned we're going to do a couple of kind of special episodes around the Christmas time. And also for New Year's, we're going to do kind of a year look back and review on some of the deals that we've worked on, some deals that have been completed, and just kind of go over what happened, how they came together, and what the deals look like. So stay tuned. And until next time, we'll see you.